All right, what's going on, everybody? Hope you guys are doing well. Here we go. Market update for this past week here. A lot of whipsaws back and forth. The market was waiting for the CPI, and it finally got it. So it was a hotter than expected CPI. So definitely, we expected that move to happen pre-market, but we did not expect that kind of big move during the intraday on Thursday. Never in history, and I saw this statistic, is that never in history has the Dow dipped 500 points and reclaimed that 500 points and added 800 points. That was a 1,300 point swing for the Dow on Thursday. So that's a big headline, right? Same thing with the NASDAQ and same thing with the S&P 500, all right? At this point, with the 8.2 inflation, it is sticky, obviously. All right. There's no F and buts. Now we're headed into November CPI. Okay. Remember, gas prices are on the rise. Okay. If you look at XLE, XOM, those prices are still hanging on. I'm going to take a look at that in a second here. But if we're looking at the November Fed rate, or whatever the current Fed rate is going into, or target rate going into November, it is obviously November 2nd is the meeting date, by the way. So it's actually early in the month. So it's only a couple of weeks away, boys. All right. But it's 99.4% going to be a 75 or potentially 100 basis points. And December is also pretty much pricing in a 50 or a 75 basis points going into November. All right. So that's the big headline today, this week. Just a lot of whipsaws back and forth, back and forth. And finally, the Qs and the SPYs dip below their respective targets or supports. And then it was all downhill from there. But then we saw that reclaim. And then now we're back in the same situation, back in a hole, I guess, right? So that's a headline of the week. All right. If I take a look at my handy dandy McKellen oscillator, all right. So I'm going to open up. I'm just going to start with S&P 500, and I'm going to blow this up a little bit for you guys. Look at the B bands. Look at what's going on the weekly. All right. So when we hit that 3,500 mark on the S&P 500, it held perfectly on the lower Bollinger Band. All right. And it just shot up passed over 3,700. Now it couldn't really, there was a lot of resistance at 3,712 area, and it just dipped back down. A lot of the speculation for today, why did the markets dip, was consumer sentiment was down for the month. Okay. If we look at NASDAQ, all right, NASDAQ composite or NASDAQ 100 here, all right, same type of situation. Yesterday, we hit that lower band and it just jumped. Now, if you look at this from a weekly perspective and look at the oscillators, it looks like we're not quite oversold yet. All right. So I do think that we have a little bit more ways to go on the downside for the NASDAQ and also the S&P 500. If I look at the weekly here, the most oversold conditions back here in 2020, where the oscillator was like minus 60 or 65. We're only pretty much at minus 30 right now. So there's actually more room to go should the markets continue to dip. Now, here's the thing, right? Here's the tricky part. We have earnings seasons upon us. All right. We have Tesla and Netflix is a two big one next week. There's some bank earnings on Monday. All right. Not a big deal because earnings, we saw Citibank report. We saw JPM report today. They didn't make too many moves. All right. And the markets weren't really running up, but there was a lot of pre-market pumping, and then it just completely sold off from 274 area, especially on the Qs. So that's what is happening around the markets here. So let's go ahead and take a look at the daily charts. This is the daily chart for the QQQ, of course. All right. So you saw this big candle yesterday. So we finally broke that 265 or 260 area, went to 254 and jumped up to 270. So intraday, you had a 16 to 17 point move on the markets. Was this due to ECB, buying up the bonds, not letting the pension fail? Certainly, there was some indication. There was certainly some headlines and news about that. But part of this jump, too, was because the short covering. Okay. The short started to cover, and then more shorts started to cover, and it just kept squeezing. All right. So here we go. The shorts are back. The bears are back, right? We hit this daily VWAP at EMA 15 and just like completely lost it. We closed at the near lows of the day around 260 mark, and we're at 260, 74 and a little bit lower here in the after hours. And this is going to look like it may overtake this big green candle. So my Monday targets, or at least my next week targets, I'm going to say we're going to retest this bottom at 254. Okay. If we go lower than that, we have to keep scrolling left into November and October of 2020. Look at where we are right now. We blew past this support at 260 that I mentioned a couple weeks ago. Now we're here. If we keep going lower, there is some support at 251. Okay. But that 250 number has got to hold, because if that does not hold, we're looking at catastrophe for the Qs and obviously the markets throughout. Okay. So 254 is a downside target. If Tesla earnings, Netflix earnings, if there is some earnings hype going into next week, okay, then I would expect that we would retry this 270 area. Okay, we're at 260 now. So I'm going to put an upside target for the week if there are great news, ECB pumping, something spectacular happening. And part of the pre-market pump today was the fact that Putin said that he was not mobilizing any more forces for Ukraine. So that was the reason why we pumped the 274 in the pre-market. And, after that, the sentiment, Michigan's consumer sentiment came out, and it was all done with. All right. So downside target, I still do think that we're going to test this 254 and bounce possibly just ahead of the Tesla and Netflix earnings. All right. So that is your Q. Let's go ahead. Actually, let's go ahead and take a look at the weekly chart, because this is going to get interesting here for you guys. All right. Your weekly chart, we're still struggling with the moving average 200 on the weekly. This isn't really a hammer in my book. The body of the candle is too thick or too wide for me to call it a hammer. Okay. But we do have some support at the 254 level. This is the second or third consecutive week that we have closed under the moving average 200. And this has not happened since 2008, guys. This hasn't happened in 2020. This didn't happen in 2018. It did. You got to go back all the way to 2008, right? In 2008, once we closed under the moving average 200 daily, there was apparently 7 straight weeks or 8 straight weeks, almost 2 months worth of downturn. All right, on the Qs on the weekly here. So look at this. What's troubling here is that you have a big volume gap. You don't have a ton of support. Once we enter into this under 254 area, you have no volume to back it up except down to 232. Okay. I'm not thinking that we're going to go there next week unless something tragic happens, but it's just not looking good. You have definitely some more demand around the COVID times. I remember COVID when we jumped up from March, all the volume and support is here. Okay. If I were to speculate that the bottom would be around this area, if that's the case, that would be about 3,200 S&P 500. Okay. So let's go ahead and go to Apple Weekly. All right. Apple Weekly still third week in a row. All right. It's closing below the EMA 100 here. SMA 200 still got a ways to go, but look at all this volume gap here, guys. Not looking good. All right. But if we go over to daily, let's put up some targets. We hit all these targets in the last previous weeks, FYI. My target for Apple this week was 133. We hit 134. I'm just going to say close enough. All right. We hit it. All right. But you look at this candle, the size of this candle compared to this candle, it's pretty much wiped out. All right. It's pretty much wiped out all the gains yesterday, all the way from 134 area. We still have a small gap here, guys. We have a small gap here in the 132, 133 range. All right. So that's got to get filled. So my targets going into next week, let's see if this 134 is going to hold. All right. Something's got to give here. You look at the CCI, it's definitely come out of oversold territory here. This is starting to curl up a little bit, but after this reading, Yeah, I don't think so. So I'm going to put a 134 target on the Apple here for next week. But if earnings, there isn't a ton of economic data or important ones going into next week, but you're going to have resistance at 143. So either we're going to hit 143 or 134.58 is the downside target for Apple. All right. So with that being said, let's go over to Tesla. Tesla reports on Wednesday afternoon after the close. All right. Let me start removing some of these targets that we talked about over the course of last few weeks. All right. Engulfing candle on Tesla. Oversold as you can be ever oversold here. We bounced here in May. We bounced in June in this area of 200. All right. And if we go lower, then you're literally at support right now. If it goes lower, then yes, we go under 200. But here's my bet. Don't tell anyone, but I'm looking to get into calls right at 200. Okay. I'm going to say at some point pre-market Monday, we're going to see 200 and possibly even below 196, 198, etc. And then guess what, folks? They have earnings 2 days away from Monday, right? The buyers or the speculators are going to come in. All right. We may even see lower for sure, but I'm going to say 200 is a place where I may be looking at calls going into earnings. Okay. We have a gap here to fill. And my speculation going into earnings season is this. Remember last June, we said the earnings season was simply good enough. Amazon beat, Google beat, they all beat. Microsoft even beat, right? It wasn't great earnings by a long shot. Okay. But it was simply good enough for the market to pump. All right. So we saw what happened back in June lows, and then Tesla ran from what 200, this area that we're in now. All right, top jumped 30%. Okay, no, I'm sorry, 50% from June lows to August highs. Okay, so this is a worthy play, I think, in my opinion, that we can actually do Tesla calls going into the earnings season. Now, of course, like I said, we can definitely see under 200, but that psychological support 200 is where I think I will be placing some bets. On the weekly, no bueno, for sure. EMA 100, I'm sorry, EMA 200, SMA 200. It looks like 185. If they do not do great on their earnings, all right, then we can see 185. So there's that part of the story too. Now, there is speculation, right, floating around that Tesla may announce a buyback. Okay, if they announce a buyback, Tesla will squeeze. Why? Because Tesla has had 4 straight red weeks, and you haven't seen that since February 2001. Okay, so that's really interesting. So this is going to be a top watch for me going into next week. Netflix number 2. All right, remember the daily chart I was drawing for you guys? Kind of sloppy chart here. Let me remove all these triangles and stuff. But you got this wedge, right? And yesterday we pumped right into the wedge. We hit the top of that trend line. You see this trend line here, okay? And it just blew up. All right, even though UBS gave Netflix a 250 target raise. All right. So what I'm looking for this coming week is I'm looking for a dip because I do think that Netflix beats, or it's one of those, again, good enough kind of situation. Because though I think their subscriber loss news is the worst of it, has already come and gone. They're doing they're obviously going to be supporting ads in the near future, etc. It's going to come down to their subscriber growth too, as well. But I think the worst of Netflix news is behind us now. Okay, so I'm going to try to get in around 225. Okay, if this breaks down, darn. All right, but I'm going to try to catch a dip here, I think, for Netflix. Ideally, I'm going to probably go OTM, depending on where we catch this dip. All right, but I'm thinking like 240, 250 calls for Netflix. That it finally breaks out of this wedge or this ascending triangle or wedge here and starts filling this gap. I'm not saying it's going to go to 334, guys. I'm just saying it's going to break out here. And earnings can possibly be the catalyst on Tuesday for that breakout on Netflix. Okay. Now, let's do one more. All right. So those are the big 2 watches going for me for next week. All right. And then the week after, we'll talk about it next week. We got Amazon, Meta, Google, Apple, etc. And it's just a mess. All right. But you look at this VIX chart and it's kind of this, potentially cup and handle type of look. Okay. We hit the September lows. All right. And we're coming back up here. A lot of resistance. All right. Up here in the $34 area for VIX. But if I go to the 4-hour chart here, that's a more pronounced potential head and shoulders. Some folks, you want to say this is, yeah, it's pretty much a nice cup and handle here. So that's the risk to the markets going into next week. But again, if Netflix does well and Tesla does well, I do think you'll see a bear market rally for the earnings and going into the following week for all the big names such as Tesla, such as Apple, etc., Google, Amazon, Meta. All right, let's take a look at SPY. I don't cover SPY very often because I don't normally trade SPY, but the SPY, hit that 357 support, all right, and held for the day at least. Okay, that's good. But let me go ahead and erase all these targets. I still think at some point on Monday we're going to revisit this low. All right. Now I know that's a big dip right here, but I think this is the 348 or 350. Let's just say 350 is going to get tested once again. 350 is going to be hard to crack, but it's going to get tested. All right, given the situation on with the markets today. If we go ahead and take a look at the weekly, okay, we're still closing under the moving average. All right, EMA 200. And prior week, last week, we tried to hold that moving average 200, and this week it still broke down. Even with the big jump in intraday on Thursday, we still dumped down, all right, to under the moving average 200. We have support at 348, but look at this volume gap as well, all right? Why do we fall so sharply into this area, right? Why do we waterfall? That's very obvious. You got a volume gap, all right? But obviously short covering and all that, changes the dynamic of things. You don't have a ton of volume support until about 337, 336 going into next week. All right, but I would say that 350 will get tested once more going into next week. All right, so with that being said, get some rest. Hope you guys did well this week. Definitely a lot of whipsaws, but great volatility. This is the best part of trading, is that you have volatility. Just be thankful we're not in like 2018, right? Or let's say, during this little run up here where the SPYs and Qs just, move like 50 cents or $1 a day. We're talking extreme volatility throughout since the bear market started in November 2020. Before I end this, I will say this: all bull markets will end and all bear markets will 100% end at some point. So be ready, folks. It can come whenever it comes. All right. Nobody knows. But when it comes, it could be a generational opportunity for all of us.